Welcome to Study Time, a televised home learning program produced by Rwanda Education Board.
Hello students, welcome to TV learning programs. I'm teacher Julius, who's going to take you in Entrepreneurship Senior 6. So, the previous lesson, we talked about financial statements, which is our Unit 5, which we talked about. Financial statements, we looked at different types of financial statements that we shall look at in this unit, where we talked about the income statement, the balance sheet, the cash flow statement, and the statement of changes in owner's equity. So we started on the income statement yesterday, where we said an income statement comprises of two accounts, which is the trading account and the profit and loss account. The combination of the two, they form an income statement. So we went on and we talked about the trading account, and we examined the components, looked at the components which are found in a trading account, And we talked about one of the elements as gross profit. We said gross profit is equal to net sales minus cost of sales. So very many formulas, we looked at them in the previous lesson. So I gave you a question which we are supposed to work out using the formulas that we talked about. And I've checked you did it well. So we are going now to see the preparation now, the real preparation of the trading account. So we have, we are going to talk about the format of a trading account, the format of a trading account. So a trading account has two formats. We have the modern format, which is the narrative format or the vertical format. And we have the traditional format, which is the horizontal format. But for this case, we shall talk about the modern, because we go with things which are modern. We shall talk about the narrative format or the vertical format. The vertical format. So you have to follow, and you know how this format is done, such that when you happen to operate any trading activity, when you happen to start up any business, or when you happen to commence a company, you know how to prepare a trading account, and then you are able to know whether you have made a gross profit or a gross loss. Because a trading account helps us to determine whether the business has incurred a loss or whether the business has made a gross profit. So you have to note that. That is the major purpose of a trading account. So we shall look at the format. One, we have to have the name of the business. That is the title. The name of the business. The name of the business. Then trading account. Trading account. Then for the period ended. For the period ended. Maybe you'll be given, in the question, you'll always be given this period. So the title comprises of three important items. The name of the business, what you are preparing. In this case, we are going to prepare a trading account. Then you have to tell us for which period is that trading account being prepared. So you have to show which period is the trading account being prepared. So then from there, you have to draw a simple table. In this table, you can divide it into four columns. Then here we have the details where we shall write the items that we have. Then you must tell us in which currency are you operating in, Rwandan francs, US dollars, shillings, what? You have to indicate it here. So we are operating in Rwandan francs. Then you have to indicate this. So these lines, they help us to organize our work very well, not to mix up things, to avoid congestion, and maybe you get confused in the process of preparing it. So that is the importance of putting these lines. But you can as well remove them and you prepare without this. So from there, we said that one of the components of the trading account is gross profit. So our major aim of preparing this is to ascertain whether the business has made a gross profit or a gross loss. And you must know, if you have to find out the gross profit, what are you supposed to have? Who can answer me? How can you know that you have made a gross profit, a gross loss? What are you supposed to have? Yes, you are supposed to have sales. Yeah, good. So in the first thing, you must know, how much have I gotten from the goods that I have sold? So you must have sales. The business has made sales, has sold goods worth a given amount of money. So these sales, we shall position them under this column, the third column. These are our sales. Then from there, you may sell goods. After selling goods, then customers return some. And they may return some because maybe they are of poor quality, they are expired, they are damaged. Due to such reasons, a customer may decide to bring back some goods. And those goods are called what? Return inwards, or sales returns. So those goods must be subtracted from the sales made by the business. So here you must say less. Less means subtraction. Less sales returns. When you subtract sales returns, you will get what? Who can tell me what you get? You get net sales. Very good. You get net sales. So that is our net sales figure. That is our net sales figure. So our net sales, as our final answer out of this, you put it here. Sales minus sales returns, you get net sales, actual goods that the business has sold, sales returns. Then after, you have to subtract what you call cost of sales. Remember, we are looking, or we are in the process of calculating gross profit. And remember, we said that gross profit is equal to net sales minus cost of sales. This is a formula that we are following. Net sales minus cost of sales. And therefore here, after indicating this, then you say net sales minus, that is less, cost of sales. What did we say that cost of sales are? We said that cost of sales, the money spent while purchasing goods for resale. While purchasing goods for resale. And we talked about the formula for getting cost of sales. So our net sales, we have them. These are our net sales. Subtract this minus in our formula, it is this when it comes to our table. Less, that is this minus. Net sales minus cost of sales. Then what is the formula that we use for getting cost of sales? You must be having opening stock. Opening stock is the same as opening inventory or beginning inventory. So opening stock. So this opening stock of ours, we shall position it here. We shall put it in this column. Then, after writing your opening stock, maybe you find that the goods that you have at the beginning of the trading period are not enough. And therefore, you decide to go and purchase more. Those goods that you have gone to purchase, they are called purchases. So you add them there. So add purchases. So these purchases, we are going to treat them from here. We said the purchases are goods bought by the business for resale. And purchases may go with what you call direct expenses. You have bought goods from the town, and you are operating your business from maybe Kimirongo. In that case, you have paid some money to transport goods to Kimirongo. That is carriage on purchases. You add them. Carriage on purchases or carriage inwards. That's what we said. It is carriage on purchases or carriage inwards. You add this figure on the value of purchases. You have paid people to help you to load and offload goods that you have bought. That amount of money paid to them is what you call a wage. So you add wages. You add wages. After, you have to find out how much money has been spent, the cost of sales. So you have to add this. When you add, you get this total amount of money spent on purchases. Then in this case, you have to take away, out of the goods that you have bought, some maybe have got problems. Then you decide to take them back to the creditors or suppliers. Then you have to subtract what we call purchases returns or return outwards. Purchases returns. So when you subtract purchases returns, you get what you call net purchases. So that figure is called net purchases. So I want you to follow me very well. So here we have the total value of purchases minus goods that the business has returned back to the suppliers. So when you less them, you remain with net purchases. So this figure is our net purchases. Then we have opening stock coinciding or being in line with net purchases. So what is the relationship between opening stock and net purchases? What should we do for these two? Yes, we add them. When you add the two, when you add these two, you will generate a figure here. This figure is called, yes, goods available for sale. That figure is called goods available for sale. Goods available for sale is equal to opening stock plus net purchases. There you get goods available for sale. The business has these goods for selling for the given trading period. Then having goods available for sale here as our figure, you subtract. When you get goods available for sale, you subtract closing stock. Remember, we are looking for cost of sales. Closing stock. When you get goods available for sale and you subtract closing stock, you get cost of sales. So that figure is called cost of sales. That's what you have been looking for. Cost of sales. So this is your opening stock. These arrows, they help you to understand these figures well, such that you don't mix them when you are writing. You make sure you write them well. But when you are working it out, you don't indicate this. So we have gotten our cost of sales. Now we can compare our two figures. We have net sales, we have cost of sales. The two are available. So what do you do now? Compare the two. Are my net sales greater than cost of sales? If that's the case, then you get gross profit. So net sales minus cost of sales, you will get a figure here, and that figure is called gross profit, which I've been looking for. That figure is called gross profit. Gross profit is equal to net sales minus cost of sales. So this is our figure. If cost of sales are greater than net sales, you get a net loss. You get a gross loss. If cost of sales are greater than net sales, you get a gross loss. In this case, our net sales are greater than cost of sales. And if you get a gross loss, you don't write profit here. You write loss and don't indicate a negative because you already have the word loss. If you write the word loss, don't indicate the negative here. You just write gross loss, then you put the figure there without the negative sign. So this is the vertical format of a trading account. So we have an example there, which I want us to work out together. Then you understand how you will do the work that I will give you. The information below relates to the books of Kaiser Traders for the period ended 31st December 2017. We have our information, that's our question. Then what do they want? Required to prepare a trading account for Kaiser Traders. Here we are going to prepare, we are not going to calculate. Preparing and calculating, they are different. Given such information, if they say calculate, use the formulas. But in this case, they are telling us to prepare. So this is how you do it. The title is very important. We have to first look at the title, which will be Kaiser Traders. Make sure you follow Kaiser Traders. Trading account for the period ended. So the period has been given. It is 31st December 2017. So for the period ended 31st December 2017. So that's your title. It has three things: the name of the business, what you are preparing, in this case it is a trading account, and the period. So your work should be very smart. So you must be well organized. You must use a ruler here to draw these lines. Don't use free hands. Use a ruler to make your work very smart. You have to indicate the currency units. This is very important. Then from there, we look at our details. We have sales. During this period, Kaiser Traders sold goods worth 300,000. So we have our sales. So sales, you write here 300,000. You write 300,000. Now, you have to check. If Kaiser Traders sold goods worth 300,000, are there goods that customers returned or brought back? Check. And those goods we said they are called sales returns or return inwards. Are they there? Yes, he returned goods worth 10,000. So we have to subtract them there. So less sales returns or return inwards. How much? 10,000. So when you subtract this, what do you get? 300,000 minus 10,000. Yes, you get 290,000. So that is your net sales figure. Are we together? 3,000 minus 10,000. You get 290. That is our net sales. So net sales, subtract cost of sales, which we are going to look for. Follow the same process here. Less cost of sales. Then you must have opening stock. Tell me, what is the opening stock? From the question that we have, opening stock, you must look at this. We have two. Stock in brackets, 1st of January 2017. Then we have stock 31st of December 2017. So this becomes the opening stock of this trading period. Remember, this opening stock was the closing stock of the previous trading period. So you have to indicate it there. How much? Yes, 150,000. Was the opening stock enough? Or they bought some other goods for resale? Yeah, they bought purchases. Simply because maybe the opening stock was not enough. So you add purchases. He bought goods worth 200,000. Here you must note two things. After buying these goods, did he pay transport for transport these goods? And that transport, that cost, we call it carriage inwards or carriage on purchases. Did he pay people to off-road and load wages? Are they there? Yes, they are there. So you add them. Add carriage on purchases. This is a direct expense. Carriage on purchases, which is 8,000. Then add wages. How much is the figure? 5,000, yes. 5,000. So when you add this, you will get 213,000. 0, 0, 0, 13. You keep 1 here, you put it here, 1, then to 213,000. So this is the total amount of money that was spent on purchases. Then you have to less purchases returns if they are there. So subtract purchases returns. Another name for purchases returns is return outwards. So you subtract 15,000. When you subtract 15,000, what do you get? So you have to get a figure which will be called net purchases. Can you subtract for me? Get 213,000 minus 15,000. So what do you get? So you can express it here very well. Those who don't know how to subtract it very well, you can indicate it here, 0, 0, 0. Then 3 minus 5, impossible. Then you borrow 1 to become 13. 13 minus 5, you get 8. You get 8. Then, after getting 8, here we have 0. So, then when you subtract this, it becomes 198,000. So 198,000. 198,000. 0, okay? 0, 0, 0. 3 minus 5, impossible. You borrow 1 here, you put it here. It becomes 13 minus 5, 8. Here we have 0. 10 minus 1, 9. Here we have 1. 198,000. So that is our net purchases. Add it with opening stock. So when you add it with opening stock, so when you get this 198,000, you add 150,000. Get 0, 0, 0. Here 8. 9 plus 5, 14. You write 4, you keep 1. You put it here. It becomes 2, 3. So it is 348. 348,000. So this is goods available for sale. Goods available for sale. Then goods available for sale, you subtract closing stock. We have closing stock, 120,000. You subtract closing stock, 120,000. So when you subtract, if you get 380,000, 348,000, you subtract 120,000. See our cost of sales, 0, 0, 0. Here you have 8, you have 2, you have 2. 228,000. 228,000. So that is our cost of sales. So when you check our figures, we have net sales 290. We have cost of sales 228,000. So net sales are greater than cost of sales. So we expect to get a gross profit. We expect to get a gross profit. So when you get your figure, so get 290,000, then you subtract 228,000. Then you tell us what you get. 0, 0, 0. 0 minus 8, impossible. So you put here 1, it becomes 10. 10 minus 8, 2. Here we have 8 minus 2, 6. Then here, that is 0. So the final answer is 62,000 as our gross profit. So during this period, a business made a gross profit of 62,000. I think you can check this. Yeah, then after, you have to write that assignment, work it out. Then you do this homework. You put it down and make sure each of you tries it out. Make sure each of you tries it out so that next time I see how best you have progressed in it. Are we together? Try to put the assignment or the homework which you have to do such that you can try to understand it more. Practice makes perfect. Make sure you try it out. Make sure you try it out. The organization of your work is very important. You have to organize your work very well. You have to organize your work very, 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 very well. Make sure you write the question quickly. Put your assignment down quickly and make sure you try it. You try it out. So that is a trading account with vertical format. With vertical format. It is not hard. You have to practice it. Then you will understand it or you will find it easier. If they say prepare, that is how you are supposed to go about it. You have to note that. And make sure you use your calculator very well, because you may use your calculator and it gives you wrong figures. And that is very, very bad. So you have to use it very well. Those who can use their heads, yeah, that's fine. That's very, very fine. Are you through? So you make sure here, you know how you treat these elements very well. Okay? So if you are through, we meet next time in the next lesson. Thank you.